Welcome to Java. Thank you kindly for joining me. It's January 6th, 2024. It is also Monday of a shortened trading week again. Now, markets are closed on Thursday in remembrance of former US President Carter. So with this, they will be shot all day long, but there still is some data coming out. We've got a few other things that are forming on the horizon here and a lot of movement pre-market. So with this, let's go ahead and get started of course, with our favorite risk indicator, the MMRI. Now, at the moment, 311.5, still extreme territory. Now, we've been here for a little while, kind of hovering. We've been watching the 10-year yield rise significantly. However, this morning it looks like there is pullback, not just in the 10-year yield, but also in the relative strength of the dollar. And this is a good thing for the markets because they have been having a significant increase. So relative strength of the dollar, as I'm doing this, still above 108.7. It was almost at 109 before, and the 10-year yield is still 4.619. Now, both of these elevated are headwinds for the stock market. The fact that they are pulling back and coming down is giving a bit of breather room. We're starting to see some green come into the United States stock market at the time. Now, this is also on a couple of other things. So at the moment, we've got stocks that are increasing. The futures are beginning to turn green as well, saying that it is kind of a positive. So with the fear greed meter and all of this reading, we've got this increasing back towards neutral territory. Still in fair territory at 32. I suspect that after it opens, this will be rising. So the current sentiment is to buy, go into this market. But the question is, should you? Now, for the short day trades, this is very good for the market. We are watching the increase in inflation, and this is mostly this green we're seeing is the difference in currency strengths. So, a lot of trade imbalances, and I'll speak a little bit more about that. So, again, shortened week closed on Thursday. Now, a couple of political things. First off, Canada, there is a report that there's claims that Trudeau may resign later on today. A couple of calls for a couple of things. There's different narratives, one of them being that this is on the tariffs. So, with the tariffs incoming and the trade wars, he's saying that that's a lot of the pressure coming in. Could be other things, speculating. We won't talk about that here. But at any rate, the trade disparities globally are having a serious effect. So, what are we watching with this? The volatility index is increasing as well. We've got gold and oil are actually beginning to turn green. So, these are a little bit more move into fear. And why are they all going green at once? This is showing the trade imbalance. So, with the fear trade going into the gold and silver, it is because the markets, right now it's the Asian markets, are looking to make more money. They're looking for more yield on their currency. So, the United States stock market, since it looks like the stronger market at the moment, all of the money is flooding from the Asian markets and the other currencies into the United States stock market. So that's what we're seeing really this morning in such a rapid pace. Now, what happened with this? The United States yields, as I was saying, hit a 14-month high before $119 billion of debt sales. So the Treasury yield, as that rose, they sold off some debt. So that with it, more money flowing into the debt brought that yield down. Now, that yield coming down is also allowing money to flow again into the markets. Now, China was the main one that money flowed from. Asian markets weak. The European markets are relatively stable, also slightly in the green at the moment. So this is mostly bleeding from Asian markets. China really weak, trying to reinsure their investors, their equities, their stock market. and renminbi, which is their fiat currency, is dropping. Now, they were rushing to do their version of quantitative easing. They've got their 10-year yield has plummeted. So buying into the debt, the currency moving, and as these shift, that is what is telling us what is going on. Now, I'm going to talk about oil in a moment. But first, let's go into the markets, the calendar. So we're getting PMI this morning and factory orders. Now, this is a gauge for inflation. And we're going to get tomorrow Fed president speaking, trade deficit prior to the market opening, and then also job opening, which is going to be a possible large mover because that is major indicator for the Fed on the rate cuts moving forward. Now, back to oil. The current administration has now just announced a major offshore oil and gas drilling ban in most federal waters. So, of course, if you're going to ban the drilling, it's going to make the current drilling and the current supply fear on the lack of supply. So, oil prices are now shooting up pre market. What is this doing also globally? Well, the countries that have been sanctioned for their oil, it is showing the value of Iran, their petrochemical export has risen 32% in 9 months on the year. So in the kind of midterm, if you will, this is shoving money into the pockets of those that were sanctioned that have the oil, namely Iran and Russia are two of the major benefactors of this move that they just did. So while it's kind of putting spite in the eye of the incoming administration, which is a large motivation for this move, it is really bad in the midterm and a little longer term, mostly for our European friends, because this is going to raise their energy cost and they're struggling with this as it is, specifically Germany. So with this, all of this, oil prices holding a 3-month high on stronger demand. It's not just stronger demand, but now they've just kind of popped in the knees the supply from the United States. So the West now has one more issue with their oil going forward that is also massively inflationary for the longer term. Okay, so we're going to turn to the other side of this is the trade. Now we're looking at dock workers. I spoke about this yesterday. They've got a strike. They're set to resume their talks this morning. Now with this trade imbalances, and we're watching again the trade deficit. United States has a massive trade deficit, not manufacturing much. So with the currency, they'll be able to offset that. So that's not going to be a huge deal in the long run. However, that is affecting prices and again pushing that agenda moving towards higher inflation. Now, the ship owner's record order book for the container vessels, as it says here, is prompting downturn warnings. This is the chart for the order book. Now, this parabolic spike you see here is all of them ordering forward container ships and vessels. Now, as this reaches this peak, the demand is shifting, and as the demand drops, this could cause a serious imbalance, if you will, as the demand drops. So this is showing recession incoming. So not so much for today, this a little bit longer term, but something to look forward to the next, probably in the next month and into the quarter. This is a serious indicator for more warnings going forward. Now, if you're a day trader and you are up for that fight, today is looking green, at least to open, and could continue through the day. Now, going into Tuesday and Wednesday, we've got the institutions that are still selling into these pops. So, with that, the days towards the midday and the end could close weaker. We'll see how the market goes. Nothing is guaranteed. These are just the probabilities. So, we've got China again saying that they're looking to continue to work with the rest of the world to safeguard the multilateral trade system, with the WTO at its core. Now, they've got an awful lot of motivation here because they now have the trade surpluses. They are doing manufacturing very inexpensively, and as demand drops, they're finding a lot of goods that they cannot sell. Now, when these tariffs hit them, that's also going to hit them forward. So, saying they're going to work with the WTO is kind of because at the moment they're forced into this position. So, with all of this, if you want to keep a little bit of safety, stay out of the crazy, we've got Ray Dalio with some of the better advice. If you don't own gold, at least some, you know neither history nor economics. And I agree with this. You don't purchase gold or own it in order to make money. Gold is a hedge because if you have an understanding of how inflation works and the fiat currency, you need to use this as a wealth preservation. So you can have your speculative that you're putting into stock, securities, very volatile, cryptocurrency as well. But if you want to maintain some of your wealth in a safer haven, it will be gold, silver to a degree, and cryptocurrencies. Now, silver is acting more like an industrial metal and a little bit more volatile than gold. However, on the dips, I suggest getting some of these into your portfolio. Now, this is an interesting quote coming out from Vitalik Buterin. Now, he is the creator behind Ethereum, suggesting artificial hardware pause for humanity's safety. I spoke a little bit at length in my Trends Forward for Artificial Intelligence, hitting not just uh, artificial general intelligence, AGI, which is the next step, but ASI, which is artificial superintelligence. Now, talking about pause in the hardware step, trying to get it to slow down so that the dangerous forms of superintelligent AI, restricting them from global computer power. This isn't going to do anything, and I'll tell you why. We are in a war, not just with trade wars, currency wars, and physical wars, but now with data and artificial intelligence. United States is not the only one that has artificial intelligence going. China also does, as well as the Middle East. Now, as soon as this was found out, all of these talks in the past about the safety were tossed to the wind because when it came apparent that there is a race, just like there was an arms race in nuclear, this will be tossed aside because whoever wants to win in their minds, they're going to rush forward as fast as they possibly can to get the technology. So we are in that race. So just to push this forward, I know it's a little bit dark and looks like there's good markets for today. So if you are trading today, I wish you a green day in general. It looks like they're great to open, at least with watch the volatility. Middle of the day as the volume drops and the industrial sell, and then possible pickup after that. So with this, I wish you all, until I see you again, stay free.